Okay. Good morning, everyone. Today we commence a new standard, that is Ind AS 116, which deals with leases. Fairly important chapter from examination perspective as well as from your practical perspective also. This is one of the newest standards. The MCA notified it on 30th March 2019, and this came into force with effect from 1st April 2019. That means for balance sheets for the year 1920 onwards, they had to follow Ind AS 116. Before we commence the standard in particular, we will be doing a brief reason what was the treatment before Ind AS 116 came into existence, why or what was the lacunae or shortcomings of the previous standards, and how that has been mitigated in Ind AS 116. Okay, so before Ind AS 116, under the AS regime, if you would have studied, there was a standard AS 19 that dealt with leases. There was also a standard under the Ind AS regime called Ind AS 117 that dealt with leases. Okay, so this was the position prior to Ind AS 116. Okay, so prior to Ind AS 116. Now, under the AS 19 provisions or Ind AS 117 provisions, what did we have in particular? Well, in particular, they discussed about the concept of operating lease and finance lease. This was the concept which you have already studied in your intermediate, and this was the concept which was discussed under the standards. Now, what was the meaning of a finance lease? So the standard AS 19 or the corresponding Ind AS, it gave a definition of finance lease as a lease that meets any of the following 5 conditions. So what are those 5 conditions? Well, those 5 conditions included if the lease was for a period almost equal to useful life of the asset. Almost equal to useful life of the asset. The second condition was the present value of minimum lease payments is substantially equal to the fair value of the asset at the date of lease. Then you had, in the case of an asset which is highly specialized in nature, like that you had 5 conditions, and if any of these 5 conditions were fulfilled, your lease would be a finance lease. And if it were a finance lease, you would have to recognize an asset. You would have to recognize an asset because in substance, the transaction was regarded as a transfer of asset or procurement of an asset. So therefore, you would recognize an asset as well as a corresponding lease liability. Any lease which did not fulfill the 5 conditions specified for finance lease, it would go under operating lease. So anything other than finance lease would go under operating lease. This was the story that existed with AS 19 or 117. Now, what is the problem with this? What is the problem with this? Let us take industries which are highly lease intensive. Okay, that means there is a lot of emphasis on property, plant and equipment, which is not every company's cup of tea to acquire the property, plant and equipment and carry on the business. Like, for example, you take entities that are engaged in multiplexes, malls, or for example, even the aviation sector. In the aviation sector, your companies do not generally purchase the aircraft. They take the aircraft on lease from aviation companies. Okay, so we take the example of 2 companies. This is a made up example, but you can see how the impact is going to be drastic. Okay, we are under the old regime. Okay, under the old regime. Okay, not that is prior to Ind AS 116. prior to Ind AS 116. Let us take the case of two companies. One is Indigo, which is an aviation company, and the competitor of Indigo, that is SpiceJet. We take these two companies. Now, both the companies are engaged in the same industry. Yes, sir. Both the companies have similar capacity. I'm just making it up. They have similar capacity, similar operations. They operate domestically as well as a couple of foreign locations. So this is what is the background of these two companies. Now, Indigo has 100 aircraft taken on lease. Indigo has 100 aircrafts taken on lease. SpiceJet also has 100 aircrafts taken on lease. Okay. Taken on lease. Okay. Now, let us assume that you have those 5 conditions of finance lease. 4 conditions are not met. And now you are checking the 5th condition, that is whether my asset is leased out for substantial period of the useful life of the asset. So Indigo has taken these aircraft on a 10-year lease. On a 10-year lease. Okay. SpiceJet also has taken the aircraft on a 10-year lease. All right. And the useful life of the aircraft by Indigo is estimated as useful life. Indigo estimates the useful life to be 10 years. Whereas SpiceJet estimates the useful life to be 15 years. Okay. That means what? In Indigo's balance sheet, if you look at this lease, it is meeting the condition of have you taken the asset on lease for a period substantially equal to the useful life of the asset? Answer is yes. Substantial useful life of the asset means anything more than 75% of the useful life. So in this case, Indigo has taken the asset which has an expected useful life of 10 years for a 10-year lease. That means Indigo would categorize this as a finance lease. Indigo would categorize this as a finance lease. And right from year one, it would pass the entry asset account debit to lease liability. Asset account debit to lease liability. This was the treatment that Indigo would do. Now, the same asset, SpiceJet thinks that the useful life is 15 years. It has records to show that. Okay. Now, when it has records to show that, or a valuer certificate or an engineer certificate, whoever are the concerned people who certify that this aircraft can be run for 15 years. And therefore, the same business, the same operations, the same localized area of operations or foreign operations, the same business model, everything is exactly the same. And SpiceJet, because it has not met any of the 5 conditions of finance lease, it will record this as an operating lease. It will record this as an operating lease. And when it records this as an operating lease, right from year 1, SpiceJet would pass the entry. Operating lease is like a normal lease that you have. So lease rent, which goes to the P&L account debit to bank. So this is the entry that SpiceJet would pass. No asset or lease liability recognized. No asset or lease liability recognized. Whereas in the case of Indigo, an asset and a corresponding lease liability is recognized. Now, you are the reader of financial statements of Indigo. You are the reader of financial statements of SpiceJet. When you look at Indigo's balance sheet, Indigo's balance sheet will be a heavy balance sheet. Why heavy balance sheet? Because it will have 100 aircrafts appearing on the asset side. It will have 100 aircrafts corresponding lease liabilities appearing on the liabilities side. So therefore, the balance sheet of Indigo would be a heavy balance sheet. Heavy balance sheet means what? It will be having 100 aircrafts worth of assets, 100 aircrafts lease liability appearing as a liability. Contrast it with SpiceJet's balance sheet, and SpiceJet has no asset, neither a lease liability. So the balance sheet here would be a relatively light balance sheet. That means 100 aircrafts are not appearing anywhere in the asset side of SpiceJet. The corresponding lease liabilities of those 100 aircrafts are also not going to appear. And therefore, the weight of your balance sheet is considerably less. This is the first point. Second point, when you proceed to calculate something known as a debt equity ratio, the debt in the case of Indigo is also going to include the lease liability in respect of the 100 aircraft, which it has already recognized as a lease liability. And therefore, the debt of Indigo is higher, and therefore, I will be reporting a higher debt equity ratio. In the case of SpiceJet, other things remaining constant, there is no lease liability, and therefore my debt equity ratio will be lower. And so when I am the reader of financial statements, my first thing that I observe will be Indigo is a company with high financial risk. Okay, so this is my conclusion. High financial risk. Sir, why? Because of the high debt equity ratio, I am not very sure whether Indigo can pull off its operations because of a high financial risk in the form of high debt equity ratio. Ideally, it should be 2:1, but if I take these aircrafts into consideration, it is going to say 10:1, for example. So a very high debt equity ratio. Whereas in this case, I take it to be of a low financial risk. Why low risk? Sir, lease liability only is not there. Matlab, debt itself is not there. And therefore, debt itself is not there. Numerator part, debt does not exist. So therefore, your debt equity ratio is less, and less debt equity ratio means low financial risk. This is what is the picture that you are going to draw based on the balance sheets of Indigo and SpiceJet prior to Ind AS 116. Now, just for 1 minute, this is the case which is present to you. Now, just for 1 minute, take a back seat and answer this one question to yourself. Are Indigo and SpiceJet really different companies? You will say, no, sir, they are the same companies. Do you think that SpiceJet does not have a liability after it records the first year's lease rent? You will say, no, sir, there is a contractual liability that requires SpiceJet to pay the lease rent for a period of 9 years. And therefore, when SpiceJet has a liability in its books, very much the same like Indigo has, don't you think that by not recording the lease liability, I am misleading my investors? Answer is yes, sir. We have not thought about it like this, but now your contention appears to be true. It appears that SpiceJet in its books of accounts is misleading the investors by saying that our balance sheet is a light balance sheet. It's not a light balance sheet. If nothing, it is as heavy as Indigo's, because you are also having a 10-year lease liability sitting on your head. The fact that you do not recognize it under AS 19 or 117, whatever was the regime earlier, that does not take away the fact that liability is not there. Yes or no? Liability is there. Because of an accounting standard, you chose to treat it as an operating lease. But in substance, the liability does exist. And therefore, what gets affected severely is the comparability. comparability of the financial statements. This takes a big hit. This takes a big hit. And if you recollect, we had done the conceptual framework for preparation of financial statements in accordance with Ind AS. Now, when we had done the conceptual framework, comparability was an enhancing qualitative characteristic of the financial statements. When you prepare financial statements, they must be prepared in a manner such that comparison between two entities or between two or more periods is facilitated. So therefore, comparability starts to get affected. That means my enhancing qualitative characteristic of financial statements starts to get hampered because of this particular arrangement. And that is the reason why Ind AS 116 came into force. That is why Ind AS 116 came into force. Acha, what are the changes brought about by Ind AS 116? What does Ind AS 116 bring which makes it better than the earlier regime? Where was the catch under the earlier regime? Prior to Ind AS 116, where was the catch? Sir, the catch was that entities had the option to to work out their leases in a manner such that they could show it as operating or finance. That was the problem with SpiceJet. The operating lease liability that was there for the remaining 9 years could not be shown in the balance sheet. It could not be shown in the balance sheet of SpiceJet, but contractually speaking, liability existed. Yes, sir. Should it have appeared in the balance sheet? Yes, sir. But because SpiceJet, as per AS 19 or whatever Ind AS in force that time, SpiceJet came to the conclusion logically. I'm not saying it is giving a fraudulent financial statement. Logically, it has prepared the financial statement, concluded that the aircraft it got on lease is an operating lease, and every year it is diligently accounting the lease rent in its books. But liability is not visible, no, sir. It is a contractual liability. It is not visible. And that was where my lacunae was there. That was the place where the shortcoming existed. The shortcoming was that in operating leases which were identified as such, the liability portion of the lease vanished. And that was why the standard setters felt comparability is going to be seriously affected. And that is why they came out with a new Ind AS, that is Ind AS 116, which we are now going to study. Of course, we have drawn from IFRS. So the standard setters originally came out with what is known as IFRS 16. So now under Ind AS 116, what are the changes that have been brought? The standard setting board said the changes are radical from the perspective of lessee. Lessee is the one who takes the asset on lease. Now, from the perspective of the lessee, whether it is a 1-year lease, whether it is a 2-year lease, whether it is a 5-year lease, whether it is a 30-year lease, 100-year lease, whatever the lease be, you will record something known as a right of use asset. And you will record a corresponding lease liability. What is this lease liability? This represents the payments towards the lease rent which you are going to make in the future. So in SpiceJet's case, where it elected or chose to be treated as an operating lease as per the standard requirements, under Ind AS 116, the 9-year liability which is still pending to be paid will now come in the books as a lease liability with a corresponding debit to an account known as ROU asset. What do you mean by ROU? Sir, ROU means right of use asset. See, SpiceJet, like Indigo, has a 10-year lease contract. That means in these 10 years, SpiceJet can operate the aircraft on whichever route it wants, whatever crew it wants, whenever it wants, and it can park those aircraft also wherever it wishes. So basically, SpiceJet is exercising control over that asset, that aircraft, by virtue of a right on that asset. And that right is conferred upon SpiceJet by the lease arrangement that SpiceJet has with the aviation companies. And that is why Ind AS 116 mandates you. It says it is compulsory to recognize a right of use asset and a corresponding lease liability So even if it is an operating lease, even if it is a finance lease, the distinction is gone between an operating and a finance lease from the perspective of the lessee. The lessee has to recognize it as a right of use asset with a corresponding lease liability, regardless of the duration of the lease. Of course, there are some exemptions relating to short-term lease arrangements or low value lease items, but we come to the exemptions later. That is something we will look at later. Presently, Ind AS 116 mandates the entity, the reporting entity, the lessee reporting entity, to recognize an ROU asset and a lease liability in the books No operating, no financing lease requirements under Ind AS 116. So is that part clear, everyone? Have you understood the lacunae that was there in Ind AS 117? And are you able to follow? Yes? Are you guys able to follow? Please confirm. What is the lacunae? Are you able to understand? Now, how to record, at what amounts to record, we will look at it as a part of the standard. But presently, you should know that operating and finance lease from the perspective of the lessee has vanished. Now it becomes an ROU asset and a lease liabilities. There are two small exemptions. We will look at that later. Okay. So let me know if you have understood why 116 is superior in its application. All right. Okay. Thank you, Jay. Thank you, Mahendra, for confirming. So now, with this background, let us now visit Ind AS 16. Okay. I'll be sharing this presentation with you towards the end of the session because I have to do quite some changes to that. But by and large, it's drawn from your study module. Okay, so you don't have to worry about it. So Srinidhi, I hope your query of operating lease, how will it be recognized in the balance sheet, is understood. Okay, all right. So now with that background, let us now jump to Ind AS 116. Let us now come to Ind AS 116. A radical shift in perspective. Okay, it is a radical shift in your perspective of accounting. So now when we talk about Ind AS 116, what does the standard say? At the inception of the contract, you will have to assess whether the contract is or whether the contract contains a lease. You will have to assess at the beginning of each contract whether the contract is a lease arrangement or whether it contains a lease arrangement. Okay. So now let us look at one example which I will prepare for you. And most of you would have completed your articleship or would be doing your articleship. Okay, so you can appreciate this quite well. Okay, so let us take the example of a company, not Reliance. Let us take the example of Nuclear Power Corporation of India. Okay, so this is one company. Now, as you are aware, Nuclear Power Corporation of India has nuclear plants at various locations. Okay, Kaiga, Ratnagiri, these are all the places where it would be having certain of its facilities. So, Nuclear Power Corporation's facilities are open only for its staff because of the highly sensitive nature of its operations. Okay, nuclear power means radiation kind of materials, so therefore it is not kept open like how you have hydraulic dams or thermal power plants which are open, people can walk in and walk out. Nuclear Power Corporation is not like that. In Kaiga, which is close to where I stay, the Nuclear Power Corporation has developed what you call a township. Okay, it has a township. In that township, you have the factory. In that township, you have the quarters. You have a school. All the facilities are there within that township because it does not want people to move outside of that. Neither is it very comfortable with getting any random outsider into the township. So it has a township. Now, Nuclear Power Corporation decides that, well, I have to give a regular, what you can say, recreational facility for my employees. I have to give a recreational facility for my employees on a regular basis. I'm making this up, but that is how you can understand the case better. So what it does is, within the township, there is some vacant space. Within the township, there is some vacant space. And in that vacant space, it asks Inox to set up a multiplex theater. So what is going to be the multiplex theater's capacity? 100 seats. Okay. 100-seater multiplex theater. Okay. Now this multiplex theater, technically, it does not ban outsiders from coming to watch movies. Okay. So you have this Inox theater. But Nuclear Power Corporation is primarily interested in providing recreational facilities to its employees who are within the township. So what Nuclear Power Corporation does is, it goes to Inox. And tells, look, I have so many number of employees. Okay. I have 20,000 employees in this township. So many employees are there that I can keep your theater running for the entire year. Itne sare employees. I have such a huge number of employees within my township. 20,000 employees. If you put in their families, assuming even 3 are there, 20,000 into 3, you have 60,000 people that are there in the township. Now, for this township, I want a recreational facility. They are all my employees and their families. So what Nuclear Power Corporation tells is, I will take your facility on rent. Okay. And you will sell all the tickets to me. To Nuclear Power Corporation. A 100-seat theater you are having, and in a day there are about in a month, 30 days, 100 seats for each day. Let us put 3 shows per day. So this comes to how much? This comes to 30 into 100 into 3. 9,000 tickets of inventory per month. Sir, this is 9,000 tickets inventory per month. Inox will issue these tickets. Inox will issue these tickets to Nuclear Power Corporation. Okay. So now 9,000 tickets. Let us assume average price is 200. So 9,000 into 200 comes to 18 lakh rupees. Comes to 18 lakh rupees. And I will further add this. Lease renting comes to another, let us say, 9 lakh rupees. Another 9 lakh rupees. So every month the outflow is 27 lakhs. The outflow is 27 lakhs. Okay. So this is outflow for NPCI. Outflow for Nuclear Power Corporation of India. How is this transaction structured? How is this transaction structured is very interesting. Just pay attention. Now, 27 lakhs is what is the agreement between Nuclear Power Corporation and Inox. So what Inox is going to do is it will issue 9,000 tickets to Nuclear Power Corporation. So 27 lakhs divided by 9,000. That comes to how much? That comes to 300 rupees per ticket. That comes to 300 rupees per ticket. You go to any theater now, minimum cost of that ticket is going to be 300 rupees minimum. But now Nuclear Power Corporation in its books will record this 300 as purchase of movie tickets for employee welfare. So it is going to record this as employee welfare expenses. Employee welfare expenses. Now, what is the arrangement between Nuclear Power Corporation and Inox is? The arrangement is that Nuclear Power Corporation will decide which movies are to be screened. NPCI will decide how the seating arrangement will be there in the theater. That means it will keep some different class of seat for directors, for managers, for the local staff. So the quality of seats, the design of seats, everything is decided by NPCI. Which movies are to be screened, when they are to be screened, what will be the show timings, when will there be a holiday, everything is decided by Nuclear Power Corporation. Inox is just fulfilling the requirements of NPCI. Inox is just fulfilling the requirements of NPCI. And for this, Inox is getting 27 lakh rupees per month. It is getting 27 lakh rupees per month. If I convert it into tickets, it is going to be 300 per ticket. And in the books of accounts, NPCI will pass the entry employee welfare expenses account debit to bank, being tickets purchased for employee welfare, for employee recreation. Okay, this is how the arrangement looks like. And suppose you go for audit. You do not know any of this background. You do not know any of this background or the story which I have just now told you. You go as a diligent employee, as a diligent articled assistant. When you go, you pick up your green pen. And with the green pen, you start to look at the vouchers. You look at the bank statements. You look that there is a 27 lakh rupees of payment. And you will look at the ticket serial numbers. You will do the vouching. And finally, you will confirm that, yes, sir, this is a purchase of movie tickets. And therefore, what the company has done is it has recorded it as employee welfare expenses to bank. You just tell me now, will you come to this conclusion or not? Without knowing the story that has happened behind, if you look at just the sale of tickets, purchase of tickets, and this journal entry, will you come to this conclusion? Yes or no? Just give me this answer. Just give me this answer. What do you think? Is my understanding that you will come to this justification right or wrong? Everything is in place. Even authorization is there for employee welfare expenses. So therefore, everything is in place. Everything is in place. You do not know what has happened here. All these things you do not know. You do not know any of this information. You are kept in the dark. You only see this. Will you recognize it as a purchase of movie tickets for employee welfare? Yes. Obviously, yes. You will take it as employee welfare. Why? I do not know the story behind it. And therefore, you will treat it as a normal purchase of movie tickets. You will take it as a normal purchase of movie tickets. Every month, the same thing happens. Every month, the same thing happens. But friends, tell me one thing. Tell me one thing. In reality, is it just a purchase of movie tickets? Answer is no, it's not. It's something much more than that. It is something much more than that. You are not just procuring the right to enter and watch a movie that is being screened. In fact, NPCI decides which movies will play in INOX. NPCI will decide how the seating arrangements will be designed. NPCI will decide at what price it will take the facility on lease. NPCI will decide when the theater will be closed. Everything happens according to what NPCI wishes to happen, and therefore, can I say that NPCI in effect is directing the use of this asset? Can I say that NPCI is directing the use of this asset? Can I say that? Yes or no? Please answer. Can I say that NPCI is directing the use of this asset? Are yes or no? Can I say that NPCI is directing the use of this theater? Yes. Definitely. Yes, it is directing, because which movies are screened, what will be the ticket price, what will be the lease rent, who will sit, when the theater will be open, when it will be closed, everything is decided by by NPCI. And therefore, is NPCI directing the use? Yes, it is. And therefore, this is an arrangement which contains a lease. On the face of it, lease arrangement is not there. On the face of it, when you went to vouch for the transactions of NPCI, all that you see is purchase of tickets, payments made through check, authorization of the management personnel, and you come saying that audit is done, NPCI is good in its maintenance of vouchers, but you do not know what has happened behind. Whereas in fact, in the backside, this arrangement of 300 rupees per ticket is not purchase of ticket for viewing the movies. It is in fact a payment that directs the use of that theater. And therefore, this arrangement does contain what? It does contain the directing of the use of that theater facility which is present. And therefore, it's not a purchase of movie tickets. In effect, it is a lease contract. In effect, it is a lease contract. What is lease? Lease means you take something from another person for a period of time for which you are going to give him consideration, and that something, it could be property, plant, equipment, it could be anything. That's something which you take for which you are going to use it. You are going to decide what to do with it. You are going to direct the use of it. That kind of arrangement becomes a lease. So in lease, there are two things which are very, very crucial. The first is there must be an identified asset, And the second is there must be the right to control the use of that asset. In this case, NPCI has an identified asset in the form of the movie theater. There is an identified asset. Movie theater is there. That is a distinct asset. It is visible. Okay. The next thing is, does it have the ability to control the use of that asset? Definitely it has. Definitely it has. Okay. That 18 lakhs which is paid to Inox is for directing the use, and then they have kind of structured it in a way such that add another 100 rupees and we will pay you 27 lakh rupees per month. Okay, so this is what is the arrangement. NPCI probably does not want to show a lease liability in its books. So the 27 lakhs is a payment that will be made by NPCI to Inox, which is for the tickets also, the lease rent also. In substance, there is no sale purchase of tickets. In substance, the 27 lakhs is entirely a lease arrangement where NPCI directs the use, has the ability to control what happens on an identified asset, which in this case is the multiplex theater. And therefore, this transaction where there is a consideration of 27 lakhs involved per month becomes a lease transaction. It becomes a lease transaction. Inox will tell, if you want me to screen what you want, if you want me to give holidays when you want, if you want me to design the seats like how you want, you have to pay me 9 lakh rupees extra per month. And NPCI says, done. Take it. We have no problem. It comes to 300 rupees per movie ticket. We are willing to take that. Okay. So this 9 lakh is for Inox giving the right to NPCI. But in substance, when you view the whole arrangement, it is 27 lakh rupees monthly outflow to Inox. And therefore, this is an identified asset with a right to control the use, and therefore it becomes a lease. Therefore, it becomes a lease. So now when we come back to the definition of what is a lease, an entity shall assess whether the contract is. Now, when a contract is a lease, what do you mean by this? A simple factory lease. The contract is a lease. Factory is there. You are giving it on lease to somebody. Now, this does not contain a lease. The agreement itself is a lease. The contract itself is a lease, or it contains a lease. When you talk about containing a lease, when you talk about containing the lease, it is the example which we saw just now. It's not procurement of movie tickets. It is in fact something far more than that. It is in fact taking the entire theater on lease. So this procurement arrangement, in the contract, they will state that 300 rupees per ticket will be the sale value on a monthly basis for 9,000 tickets. So 9,000 into 300, 27 lakhs is to be paid. This is what will be mentioned in the contract. But if you go back to how the contract was structured, you can see that it is not Inox which decides. It is NPCI which decides what movies to be screened, when to be screened. All these things are decided by NPCI. And therefore, this arrangement contains a lease. This arrangement contains a lease. Okay. So, the first time this was introduced, it required a very detailed study of each and every contract. It required a very detailed study. Even now it does, but previously nobody thought about it in such a way. Okay. So what is going to happen in this case? In this case, you cannot pass the entry employee welfare expense account debit to bank. This entry is wrong. Instead, what you have to recognize is you have to recognize ROU asset account debit to lease liability. This is the entry that you are going to pass. The Inox Theatre is your right of use asset. And what you are going to pay to Inox, 300 rupees per ticket, say you have entered into an arrangement for 3 years, then that is going to be a lease liability for you. How do I account at what value? All of that will come later. But presently, we just understand what this standard talks about. Okay. So for the above purpose, what is a lease? A lease is defined as a contract or part of a contract. Okay. So in a contract, you may have a lease component, a non-lease component also. Okay. So it could not necessarily be the whole contract. It could be partial contract. It could be a contract where some portion indicates a lease, some portion does not indicate a lease arrangement. We will come to that towards the later part of today's session itself. Okay. And this contract or part of contract conveys the right to control the use. It conveys the right to control the use of an identified asset. In our example, identified asset was the theater. Right to control the use was what? Right to control means NPCI decided how Inox would function for the purpose, for the benefit of its employees for a period of time, which is normally known as lease term, in exchange for consideration, which is known as lease payments. So each and every term we are going to discuss in detail, each and every term. Okay. What do you mean by identified asset? We will discuss. What do you mean by right to control? We will discuss. What do we mean by lease term? We will discuss. And when we discuss the lease payments, what you can say, when we discuss about lease payments, it is only after this, after lease payments, you will start to pass your journal entries. You will start to pass your journal entries. Wैसे the accounting has become fairly simple from the perspective of the lessee. You don't have to even think whether it is operating or finance. You just apply ROU, asset account debit, to lease liability. It is a very, very clear cut, what you can say, adjustment. It is a very, very clear standard in that sense. So even today, you won't be passing journal entries. Maybe next class also you won't be passing journal entries, because it will go in discussing the concepts, looking at the case studies which are given in your study module, RTP, whatever is there, because this standard like 115 is largely going to focus on cases. It is largely going to focus on cases and case studies. Okay. So we are going to now plunge into the definition of this standard. The first thing is, what we are going to see is what is a lease, and in that regard, what do we mean by an identified asset? What do we mean by an identified asset? Okay. In our case, in the example of NPCI and Inox, that multiplex theater was an identified asset. The multiplex theater was an identified asset. Okay. So what does the standard say about identified asset? The standard says that an identified asset can be explicitly specified in the contract. You mention, if you go to any industrial development corporation of your state and you want a parcel of land on lease, then the contract between you and the industry's development corporation will state that in this arrangement, this particular plot of land is going to be conveyed by way of a lease to this particular entity. So you are specifying that in the contract, or it could be implicit in accordance with the terms of the contract. It could be implicit in accordance with the terms of the contract. Moreover, an asset can be considered to be identified even if it is not yet manufactured, as it will be made available to the lessee in accordance with the contract. Okay. So now Couple of things for identified asset. Explicitly identified we discussed. Implicit, in accordance with the terms of the contract, we will have to discuss a couple of things. Okay, so far is it going on fine? Is it clear, everyone? Yes, so far is it clear? Any doubts? Srinidhi, Mahendra Kumar, Jay Srivastav, Dinesh, all clear so far? Any doubts? Yes, clear. Okay. Manikandan, Srinidhi, Mahendra, all have confirmed. All right. So now let us proceed. What do you mean by an identified asset? Explicit, we discussed. It is specifically mentioned in the contract. Implicit arrangement. Implicit arrangement. I'm drawing this example from your study module. We will be doing it right now, but just for the purpose of making you understand. Okay. Suppose you are manufacturing a particular article. Okay. You are manufacturing a particular article that is extremely huge in size. Okay. A very huge article. Okay. For example, let us say a 10,000 liter water tank. You are manufacturing a 10,000 liter water tank. And this 10,000 liter water tank is manufactured by you. Let us assume that nobody else has manufactured this. So it is a huge tank. Okay. You have to transport this water tank. Why 10,000? Isko hum log na, we will make it little unrealistic for you to appreciate. 1 lakh liter water tank. This water tank, you want to transport it from Mumbai to Chennai. You want to transport it from Mumbai to Chennai. Now this 1 lakh liter water tank cannot go by road. Okay. Our roads are not so huge to have a 1,000 liter water tank commute all the way from Mumbai to Chennai. There is only one way I can move it, and that is through railways. That is through railways. Okay. Now, railways, if you have seen the 59 coach, what you can say, the goods trains, they don't have the capacity to lift and put this 1 lakh liter water tank on it and transport it from Mumbai to Chennai. Nahi hai. In those coaches, you don't have the capacity. But Indian Railways has only one wagon which is known to the manufacturer, that this one wagon alone is capable of moving this huge water tank from Mumbai to Chennai. From Mumbai to Chennai. Sheena, I'm coming to your query. Okay, I'm coming to your query. All right. If I'll come to that when we discuss directing the use. Okay. Mumbai to Chennai, the railways arrangement. The railways has only one wagon. It has only one coach, which is of such a disproportionately large size, where this water tank can be fitted. And that will go on a snail's pace from Mumbai to Chennai. It will take 25 days to reach, because it's a huge asset. It will go slowly, slowly, slowly. 25 days it will take. This is not mentioned in the contract. This is not mentioned in the contract, which wagon is going to be used. But it is a common knowledge to everybody in the industry that railways has only one wagon, and this one wagon is going to be doing the duty of moving this 1 lakh water tank. Let us assume it has to move these 1 lakh water tanks every month. Okay, so every month, 25 days it takes to move from Mumbai to Chennai. Within 4 days, that empty wagon comes back, and then after it comes back after 4 days, again on the first day, you put the 1 lakh liter water tank on that wagon. It will take 25 days to go to Chennai. Then again after 4 days, it will come back to Mumbai. And again, uska yahi kaam hai. So every month, you are taking this wagon for transporting your 1 liter water tank from Mumbai to Chennai. This particular wagon is only one of its type. They don't have any other such wagon. This particular wagon is only one of its type. It is not specifically identified in the contract, but it is implicit, no? Now, everybody who is part of that contract, the railways, the manufacturing company, each one of them knows that ye ekmatra aisa wagon hai. This is the only wagon that is there with Indian Railways. So therefore, implicitly, is there an identified asset? Yes, there is an identified asset. That wagon is an identified asset because each month that wagon picks the water liter, takes it to Chennai, then it comes back, again picks up the water tank, takes it to Chennai. Every month that wagon does the same thing. Every month. And aisa ek hi wagon hai. There is just one wagon that can do this. And therefore, there is an identified asset which is not mentioned in the contract. That means it is implicit. That means it is implicit. However, it is not even necessary that the asset must exist when you enter into the contract. Jab chahiye, when you need the asset, the wagon will be ready. Yes, so for example, you have entered into a contract on 1st April 2021. Ki we need to transport the 1 lakh liter ka water tank. We need to transport it from 1st July 2021 onwards. Every month we have to transfer one tank. So what Indian Railways tells, fine, give me the dimensions. By 25th of June 2021, I will give the wagon to you. By 25th of June 2021, I will be giving the wagon to you. On the date of agreement, did the asset exist? The asset did not exist. It came into existence later on 25th June before the commencement of the lease. That is 1st July 2021. So therefore, this becomes an example where the asset is not even manufactured. Okay. As it will be made available to the lessee in accordance with the contract. Even if it is not manufactured, it will be made available to the lessee. Further, the identified asset should be such that the lessor should not have a substantive right to substitute the asset throughout the period of use. Okay. Acha, let us take the period of April 2020 to March 2021. Okay. COVID tha. There was COVID. Yes, April 2020, we were under a strict lockdown for about 40 days. We reopened on 4th of May. Then again, it was, containment zone, this zone, that zone, karte. Public transport was severely affected. Public transport in a city like Mumbai, in a city like Delhi, Bangalore, Hyderabad, or Delhi, Bangalore, Kolkata, Chennai, public transport services were suspended. Local trains were not plying. Metros were not plying. It was a very sad state of affairs for the daily commuters. So at this point of time, you have a company, Infosys. Infosys needed some of its employees to come to to come to the office. So what Infosys does is, Infosys goes to Uber. Infosys goes to Uber and it tells Uber in the contract that, look, I need you to pick up my employees. 5 employees are there. For these 5 employees, I need 5 vehicles. I need 5 vehicles. You will have to pick up these 5 employees every day at 8 a.m. So Uber says, so the arrangement is such that 5 sedan vehicles. Sedan vehicles matlab like Swift Desire or Etios or Etios, whatever. Okay, so Swift Desire or Etios. Okay, 5 sedan vehicles to pick up and drop. Pick up is 8 a.m. Drop is 6 p.m. Although companies don't leave you so early, but just making it up. Okay, so 8 a.m. I need you and 6 p.m. you will have to drop them off. So you need kitne vehicles? You need 5 sedan vehicles. Uber says yes, आपको गाड़ी मिल जाएगा. You will get the vehicle. Now, tell me, in this agreement, is there an identified asset? Is there an identified asset or not in this agreement? Look at this agreement and tell me, is there an identified asset or not? Uber has agreed. 8 a.m., 6 p.m. you will get the vehicles. Is there an identified asset? Yes. Mahendra Kumar Bhuyan is saying yes. Jay Srivastav is saying there is a sedan vehicle. Yes. Any other answers? Is there an identified asset here? Is there an identified asset here? Any other answers? No answers. Is there an answer anywhere? Okay. Just think of it. I have these 5 employees, A, B, C, D, E. Desire, Etios, Desire. Okay. These are the assets. Registration number 1, 2, 3, 4, and 5. Okay, I've kept it fairly simple. This is how it is. Now, on one of the days, now please pay attention. On one of the days, desire number 5 gets a job to go to the airport. Now, if it goes to the airport, it cannot ferry E. So what Uber does is, the agreement is for a sedan. So therefore, it will send another Etios with number 6. Has it violated the agreement? No, it hasn't. By agreement was for 5 sedan vehicles. In place of desire, it has sent an Etios. Now you look at this arrangement and tell me, is there an identified asset or not? Now you look at this example and tell me, is there an identified asset or not? Is there an identified asset? The same arrangement can be done for 1, 2, 3, 4 also. Okay. Wherever they get a duty, that point of time you can remove that particular vehicle and in its place you put another vehicle. Okay. So now you tell me whether there is any what you can say, identified asset, or sir, these are not identified assets. What do you think now? Vidula is saying no, it is not an identified asset. If you can give me the reasoning, I will be happy. Others, what do you think? Is there an identified asset now? What do you guys think? Guys, please respond. Respond. Please respond. No. Mahendra Kumar also is saying there is no identified asset, which is absolutely right. Uber, at any point of time, it can substitute a vehicle and put another vehicle in its place. As long as you get a sedan, as long as A, B, C, D, E get a sedan to transport them from office to home and home to office. Itna milta hai, bahut hai. This is more than enough. It's not identified which vehicle, which registration number, which driver, which chassis number vehicle is going to be plying on this route. That is not mentioned anywhere in the contract. The contract has only said sedan vehicles. If those vehicles get an order somewhere else, which is more profitable for Uber, Uber will put these vehicles there and in its place, it can substitute with another similar category of vehicle. Milega sedan hi milega. You will get a sedan only. Only thing is you will not get the same sedan which was given to you. You will get some other sedan. Yes. However, because this substitution right is there with Uber, there is no identified asset. There is no identified asset. It is not identifiable because Uber has thousands of sedan vehicles at its disposal. Somebody is not available, replace it with another one. Third person not available, bring a fourth driver in his place. Okay, it does not really matter who comes. What matters is Infosys needs a sedan vehicle to transfer the employees from the company, from the home to the company premises and back. And therefore, I cannot say that this arrangement contains this arrangement has an identified asset. So now you come back. What do you mean by an identified asset? It could be explicit, I have explained. Implicit, I have told. Future assets also, I have told. The lessor does not have substantive substitution rights. In the case of Infosys and Uber example, Uber had substantive substitution rights. Matlab, it could substitute the vehicle. It could substitute the vehicle, and as a result of that substitution, Infosys does not have a right to direct the control of that asset. Infosys cannot direct the control of that particular asset because there is no particular asset in that case. It is a substitution right which is not the lessor. So you can have an identified asset only when the lessor does not have substitution rights. Uber has substitution rights here, and therefore there is no identified asset. And because there is no identified asset, there is no lease. There is no lease. So for a lease, first thing is asset hona chahiye which is identified. And what do you mean by identified assets? The asset, the lessor does not have substantive substitution rights. What do you mean by substantive substitution rights? What do you mean by that? Okay. First thing, practical ability to substitute alternative assets throughout the period of use. Suppose you have an arrangement with Uber for 5 years. In this 5-year period, Uber can substitute alternative assets freely. And there is a practical ability to substitute the alternative assets throughout the period of use. Matlab, whenever you want, you can substitute alternative assets. Okay, so there is a practical ability. There is a practical ability. And secondly, lessor would benefit economically from exercise of its right to substitute the asset. In our example, driver number 5 of the Swift Desire, who was supposed to go to E, went to the airport. So because number 5 went to the airport, the fare for commuting to the airport is higher, and therefore Uber is economically benefited by that. And that is the reason the what you can say the change was done. That is the reason the change was done. Okay, so economic benefit was there, number one, and Uber had the practical ability to substitute the asset. And therefore, does Uber have a substantive right of substitution? Yes, Uber has substantive right of substitution. Uber has the substantive right of substitution. वो जब चाहे, it has the ability to change the vehicle that is allotted. Okay, it has the ability to change the vehicle that is allotted, and therefore that right of substantive substitution is what makes it a non-identified asset. Is what makes it a non-identified asset. Is it okay? Yes. All right. Now, the evaluation of existence of substantive substitution rights with the lessor should be done on the date of inception of the contract. All right. Now, let me further build up on this. Infosys enters into a contract with Uber for one luxury BMW 7 Series, registration number 23. Identified asset. It is an identified asset. One luxury BMW 7 Series having the registration number 23. So Infosys has entered into an arrangement with Uber to take this. Okay. Uber is bound to give this. Okay. The arrangement is for 12 months. The arrangement is for 12 months. Okay. It wants to, move about its top honchos, the directors, executive directors, CEOs, etc. So they have taken this vehicle from Uber. Now, Uber puts in a condition. Sir, what condition? You cannot take the vehicle. It puts condition like gambling not permitted in the vehicle. Number one. Number two, it is meant for drives within the state only. Okay. Permit is not there to go outside, and Infosys also has that only in mind. So therefore, outside state not permitted. Outside the state not permitted. So these are 2 to 3 conditions which it has put. Now, gambling not permitted in the vehicle or transportation of drugs is not permitted by the vehicle. These are which type of rights? Are they substantive rights or are they just protective rights? What do you think? Outside the state not permitted because permit is not there. I have not taken this vehicle's permit. So therefore, travel outside the state is prohibited. So now you tell me, these are which type of what you can say conditions. These are which type of rights? Are they substitution rights or are they protective rights? If you say they are protective rights, just answer why they are protective. Come on, tell me. Jay Srivastav is saying protective right. Piyush Agarwal is saying protective right. Mahendra Kumar is saying substantive right. Any other answers? Substantive right. No other answer. Srinidhi, Vidula, what do you think? What type of right is this? To save the vehicle from penalties. That's right. So therefore, these kind of conditions which are put in are merely protective rights. If you remember, I'm not sure whether you've done business combination or not. If there is any student who has done business combination, you will recollect that protective rights were discussed there also. For example, bank gives a loan to a company, and thereafter in the clause for lending, the bank states that the company cannot declare dividend without the bank's permission. The company cannot acquire another company without the bank's approval. The company cannot, what you can say, take on a new line of business without the bank's approval. So ultimately, you cannot say that, sir, bank is exercising so much control. No, it's not control. The bank is just protecting its position. All these things which are prohibited would create a cash outflow for the company, thereby affecting the bank's position. Similarly, in this case, gambling, transportation of drugs outside the state, all these kind of activities will subject the vehicle's owner to penalties. And therefore, to prevent that, you are entering into agreement which gives some protective rights. You cannot say protective rights are substantive rights. You cannot say that they are substantive substitution rights. They are two different categories altogether. Okay. So these are merely protective in nature. These are merely protective in nature. And therefore, when an entity has protective rights, it does not create a substantive substitution right. So substantive substitution, protective right hai, you cannot say that substantive substitution right also exists. There will be two different types of rights. Okay, so that is the one difference that you have now. So if you talk about substantive substitution, it must be practically possible and economically beneficial. Okay, it should be existence of substantive substitution rights should be done on the date of inception of the contract. Existence of rights which are merely protective in nature does not create a substantive substitution right. Does not create a substantive substitution right. Okay. So far, is it clear, everyone? Yes. Yes, Tanushri has confirmed. Tell me. Have you understood the difference between protective rights and substantive substitution rights? Okay. Now we are taking the vehicles on lease. So Infosys takes the vehicles on lease. So we have to account for the lease in the books of Infosys. So this is a fresh slate. Okay. So now when we have to account from the perspective of Infosys, which is taking the company, which is taking the vehicles on lease, we will have to decide, sir, whether Uber has a substantive right to substitute or not. Most of the cases, yes. But in some cases, it is very difficult to know. Either it's not written somewhere, it's not mentioned somewhere, and therefore, it's not clear who has to estimate it. Unfortunately, the lessee has to estimate whether this has a substantive substitution right or not. Okay. So you will have to think from the perspective of lessee. Now, lessee, can he think that Uber can substitute the asset? If yes, then as per Infosys, it has a substantive substitution right. If no, then at that point of time, Infosys can, what you can say, whether the lessee holds substantive. If no, then what? How can lessee decide? In all cases, whether lessor has substantive substitution rights. ऐसा हो सकता है क्या? Do you think the lessee will decide in all cases? No. In some cases, yes. For some cases. So when the lessee can identify whether the lessor has substantive substitution rights, then at that case, you proceed under this particular clause. That is, yes, for some cases, it can decide whether it is a substantive substitution right, and therefore you will treat it as a corresponding lease arrangement. Okay, so treat it accordingly. Treat it accordingly. However, in many cases, the lessee cannot determine whether the lessor has a substantive substitution right. So what does the standard tell? Do not investigate unnecessarily. Do not investigate unnecessarily. Okay. Ind AS gives you something known as a practical expedient. Gives you something known as a practical expedient. Practical expedient means what? Convenience sake. For convenience sake, just assume that, please do not assume that the lessor does not have substantive substitution rights. You have to assume this, because if you assume that it has substantive substitution rights, you will say, sir, lease only is not there. And that is why the practical expedient tells, don't investigate much. Upar se pata chalta hai. If you come to know by just the plain surface, then you treat it accordingly. If no, whether how can the lessee decide? If he cannot decide, then the practical expedient requires that assume that the lessor does not have substantive substitution rights. It makes your job fairly simple. It makes your job fairly simple. Okay. From a lessee's perspective, it involves judgment to decide whether the lessor holds substantive substitution rights. Accordingly, as a result of subjectivity involved, Ind AS in all cases permits to let the lessee assume that the lessor's substitution rights are not substantive, Okay. So if you take it as substantive, substantive, then there is no lease. And this is a standard on leases. So therefore, you have to keep the transactions within the lease within the grip of the lease criteria. And therefore, Ind AS 116 tells us practical expedient, assume she does not have substantive substitution rights. She does not have substantive substitution rights. And that will make your job fairly simple. That will make your job fairly simple. Is it okay, everyone? Are you kind of getting bored with so much of theory, so much of examples? Is the session going on fine? Have you understood anything that I need to do? How is the session going on? Just give me your feedback. There are so less number of students. Is it going on fine, or is it too much of theory that I'm wrapping up? Is it fine? Okay, fine. All right. Okay, so with this background, we have just completed the first part. That is, what is an identified asset? And with that identified asset, we now move on to our next illustrations, which are there in your study material. Okay. Okay, fine. Session is going interesting. Thank you. All right. Now, let us take up the illustrations from your study module. Dekho, computational part of the standard is very less. In fact, if I have to talk, out of 50, you have probably only 10 illustrations where computation is there. In your test your knowledge also, it's just 1 or 2 where you have computation. Otherwise, it is largely a case-based standard. And that is why this is, you don't have much to compute, but you have lots to understand. Okay. So now this is what I have already explained. Customer XYZ enters into a 10-year contract with supplier ABC for the use of a rolling stock. That means trains, which I was talking. The rolling stock is designed to transport materials used in customer XYZ's process, not suitable for use by other customers. The rolling stock is not explicitly identified in the contract, but ABC owns only one rolling stock that is suitable for XYZ's use. If the rolling stock does not operate properly, the contract requires ABC to repair or to replace the rolling stock. So whether there is an identified asset, answer is yes, there is. Sheena has asked a question. If there is a substantive substitution right, does this mean that there is no lease? Obviously, for lease, you need to have an identified asset. For identified asset, the lessor should not have substantive substitution rights. So a lessor has substantive substitution rights. That means there is no identified asset, and there is no identified asset means there is no lease. So if I have to put it in a flow chart, for lease, you need to have an identified asset. For an identified asset, there should be no substantive substitution rights with lessor. No substantive substitution rights with lesser. If the lesser can substitute, aaj desire hai, tomorrow he will put in ETOs, day after tomorrow he will put in something else. That means you are not controlling the asset. Asset is changing every now and then. So therefore, if there is a substantive substitution, right, there won't be an asset. And when there won't be an asset, there cannot be a lease. There cannot be a lease. Okay, so that is how it goes about. All right. So illustration 2 is done. I have already decided. Customer XYZ enters into a 10-year contract with supplier ABC for the use of a car. Okay. The specification of the car is specified in the contract. Okay. And at inception of the contract, the car is not yet built. So now tell me whether there is an identified asset or not. Whether there is an identified asset or not. There is, because everything is identified. Brand, type, color, options, everything is identified. Okay. But it's not yet built. To kya ho gaya? At inception, you have decided. Later on, when the lease actually commences, that time the car will be made available to you. So there is there an identified asset? Yes, sir. There is an identified asset. Okay. There is an identified asset. Okay. Now, coming to substantive substitution rights, illustration 4. An electronic data storage provider, okay, provides services through a centralized data center that involves the use of a specified server number 10. The supplier maintains many identical servers in a single accessible location and determines at inception of the contract that it is permitted to and can easily substitute another server without the customer's consent throughout the period of use. So electronic data storage provider, entity stores the content in the cloud. Entity stores the content in the cloud. Cloud means what? Suppose you have entered into an agreement with Google for cloud storage. Cloud storage means your content or your material or your data is stored in the cloud. Cloud means what? Cloud means a server which is situated in some place which we do not know. Let us assume that your data is stored by Google on the servers which are situated in New York, for example. So Google server situated in New York contains your data. Now, unilaterally, Google can say, I'll move this data from New York servers to, let us say, California servers. If that is the case, you as an entity, are you controlling where your data should be stored? Answer is no, you're not. Who is controlling? It is Google which is controlling. That means the lessor is controlling where your data should be stored. Have you identified which server where your data should be stored? No, you haven't. And therefore, this is a substantive substitution right. This is a substantive substitution right. Further, the supplier would benefit economically from substituting an alternative asset, because doing this would allow the supplier to optimize the performance of its network at only a nominal cost. Okay. In addition, the supplier has made it clear that it has negotiated this right as an important right in the arrangement, and the substitution right has affected the pricing. So whether the rights are substantive? Yes. Is there an identified asset? There is no identified asset. That is absolutely right, Vidula. There is no identified asset. Okay. Identified asset means what? Today you should be able to tell on which server your data is there. And after 10 years also, if that is a part of your lease period, your data should be there at that location only. which is not the case presently, and therefore whether the substitution rights are substantive, yes, and whether there is an identified asset, no. There is no identified asset. Okay. Assume the same facts as in scenario A, except that server number 10 is customized. That means that server number 10 is specially designed for you, and the supplier does not have practical ability to substitute the customized asset throughout the period of use. Additionally, it is unclear whether the supplier would benefit economically from sourcing a similar alternative asset. Okay. Whether the substitution rights are substantive, answer is no. And whether there is an identified asset, yes. Whether there is an identified asset, answer is yes. We can also discuss this with the help of one more example. Okay. Let us assume, for example, what do you mean by substitution rights? Substantive substitution rights. What do you mean by that? The lessor has a practical ability to substitute, and the lessor would benefit economically. That means, suppose, for example, you have entered into an agreement to lease out split ACs. You have entered into an agreement to lease out split ACs in your office. That means your office will get AC units on lease. Okay, AC units on lease. Comparatively, you have another agreement where you are yet to decide that you will not go for a split AC. What are you going to do is for centralized AC. Okay. Two different buildings. Okay. Now, when you talk about split AC, is substitution easy in this case? Yes. Substitution is easy. Today, you remove one split AC. In its place, you can put another split AC. So, substitution is easy. Okay. Easily you can remove the split AC, the unit, put in a new unit, put in a new split AC, and that is going to run. Okay. So substitution, it's looking funny. Substitution is easy. Okay. Whereas in the case of a centralized AC that you've taken, if you have to remove the whole unit, you have to break the walls, break the ceiling, and then you do it. So practically not possible. Practically not possible to substitute. Both the things must be possible. That means practically it should be possible to substitute, and then look at the standard. It should be economically beneficial to substitute. Beneficial to substitute. Is it okay? Have you understood, guys? Yes. So this is what is the meaning of substantive substitution rights, wherein you should have practical right to substitute. And second one is, it should be economically beneficial. It should be economically beneficial to the lessor. Okay, so both the things are discussed, and that kind of takes care of illustration 2, 3, 4, AB. Let us then move on to illustration 5. Do you guys need a break, or shall we complete these illustrations and do a break? What do you think? Do you need a break, or shall we complete this and take a break? Right. Vidula is right. Srinidhi, Tanushri is also right. We do these illustrations, take a break, or do you need a break right now? Break. Okay, fine. So we take a break. 1 second. Okay, Srinidhi, Sheena, I'm getting more answers for doing the illustrations. We'll do these 3 illustrations. Okay, chota sa illustration hai, you don't have to write anything. Then we take up a new concept of right to control the use. Okay. Customer XYZ enters into a 15-year contract with supplier ABC for the right to use 5 fibers within a fiber optic cable between Mumbai and Pune. Okay. So I have Mumbai, Pune. Between this, I am going to use 1, 2, 3, 4, 5 fibers. 5 fibers. That means I can identify these fibers. Okay. The contract identifies 5 of the cable's 25 fibers for use by customer XYZ. Okay. That means what? Mumbai to Pune ke beech mein there are 25 fibers. Out of 25 fibers, 5 fibers are distinctly allocated to XYZ. Okay. The 5 fibers are dedicated solely to customer XYZ's data for the duration of the contract term. Assume that supplier ABC does not have a substantive substitution, right? Is there an identified asset? Very much. You can easily look and say that these 5 fiber optic cables belong to me, that is the company. So is there an identified asset? Answer is yes. There is an identified asset. It is physically distinct. These 5 fibers are physically distinct from the remaining 20, and therefore there is an identified asset. There is an identified asset, explicitly identified. Okay. Next one is illustration 6. Customer XYZ enters into a 10-year contract with supplier ABC for the right to transport oil from India to Bangladesh through supplier ABC's pipeline. The contract provides that XYZ will have the right to use 95% of the pipeline's capacity throughout the terms of the arrangement, whether there is an identified asset. Okay. Now see, many times it so happens that you do not get an identified asset. Rather, you get the right to use a portion of the identified asset. For example, if you go to Mumbai, you see that there is this Ruby building, which is about maybe 15-20 floors, out of which EY's office was about 2 to 3 or 3 to 4 floors. So you are not taking the entire building on lease. You are taking a portion of that building on lease, which becomes an identified asset, Many times what will also happen is you are having a particular asset. वो एक ही asset है. You are having that only one asset with the lesser. That asset is such that it is an asset that gives capacity for transferring oil or water or data or electricity, whatever it is. Okay. So now you are going to transport your data, your water, your oil, whatever is there through that particular pipeline, And when you do it through that particular pipeline, you are doing along with you, others are also doing. There are no multiple pipelines. Okay, no multiple pipelines. And also at the same time, you cannot divide the space within pipeline. within pipeline, not possible. Not possible. So then what are we going to do? How do we see that this is an identified asset? So what Ind AS 116 tells, in such a case, sir, you look at the capacity of that pipeline. You look at the capacity of that fiber optic cable. If you as the entity are substantially using the entire capacity, then that asset is an identified asset for you. If you do not substantially use, that means it is below 90%, then in that case, it is not a lease arrangement. It is not a lease arrangement. So divide the space within the pipeline is not possible. However, 95% of capacity is allocated to the lessee. That means what? This pipeline is almost solely for the usage of transporting the lessee's goods, okay, which is what you can say, for the right to transport oil. So 95%, that means what? Ye pipeline mere liye to bana hai. I am deciding what goes in it because it is all my goods only. Okay, majority of it, overwhelming majority. And therefore, when there is a question of capacity, if the capacity is substantive, it becomes an identified asset. And therefore, in the first scenario, whether there is an identified asset, yes, there is. Now, why there is an identified asset? The contract provides that customer XYZ will have the right to 95% of the pipeline's capacity. That means wo pipeline ka jo bhi capacity hai, you are only taking the benefit out of that. Okay, and therefore, there is an identified asset. There is an identified asset. Scenario B, same as in scenario A, except that XYZ has the right to use 65% of the pipeline's capacity throughout the terms of the arrangement. Now here substantive nahi hai. It's more than 50, that is okay. But I'm also sharing considerable space within the pipeline for others also. And therefore, is there an identified asset? Is there an identified asset in this case? No, it's just 65%. Substantive means 90% or more. Okay, substantive means 90% or more. Okay, all right. This is taken from Test Your Knowledge. A lessee enters into a 10-year contract with a lessor to transport a specified quantity of goods. Lessor uses rail wagons of a particular modification and has a large pool of similar rail wagons that can be used to fulfill the requirements of the contract. The rail wagons and engines are stored at lessor's premises when they are not being used. Costs associated with substituting the rail wagons are minimal for the lessor. Whether the lessor has substantive substitution rights and whether the arrangement contains a lease. Whether the arrangement contains a lease. So now important part is what? They have mentioned that cost associated with substituting. Cost associated with substituting the rail wagons are minimal for the lessor. That means what? Can they easily separate? Yes, they can easily separate. Okay, they have the they can easily what you can say be substituted, and therefore it does have substantive substitution rights. It does have substantive substitution rights. They have not mentioned whether there is they have not mentioned whether there is an economic benefit or not, so we are not concerned. Okay, so substantive substitution rights do exist, and lesser benefits from substitution. This part is assumed. Okay, so therefore substantive rights are there and whether the arrangement contains a lease? No. Lease can happen only when there are no substantive rights. No substantive rights means identified asset exists. Identified asset exists means lease is there. However, if no substantive rights means no identified asset, no identified asset means no lease contract arranged in it. Okay. So now can you, did you guys understand the illustrations? Yes. All the illustrations are done. Any doubt so far, anyone? Any doubts, any problems, any difficulties? Am I going too slow, too fast, too boring, too much theory, too much speaking? Yes. All clear? Guys, respond. Srinidhi, Sheena, Mahinder. Yes, sir. Understood. Okay. All right. Is the pace okay, everyone? Is it going on too slow? Somewhere I find I have become too slow. All right. Okay, fine. So we take a 10-minute break. It's 8:50 now. We break till 9. Okay, we shall resume at 9 a.m. Okay. Okay. All right, guys, welcome back from the break. Yes, I think too much of theory, but I'm glad that you guys are able to understand. So we have completed the first part of the lease definition that speaks about an identified asset. It is very essential because what you are going to control is an asset. So सबसे पहले at the first point, you have to know that there is an asset. Okay. Only then you can later on move to the other parts. So if you look at the definition of lease, it is a right to control the use of an identified asset. So in the NPCI example, the theater was an identified asset. Okay. So if there is no identified asset, there cannot be a lease. Okay. So in the case of Infosys and Uber example, which I gave you, there is no identified asset. Sedans will come and go. Okay, today some sedan came, tomorrow another sedan comes in its place. So that is not, you are not controlling somebody else. It is Uber which is controlling which vehicle should be sent to you. But in the case of Uber, in the case of Infosys, Uber, BMW 7 Series example, that becomes an identified asset. The asset must have been identified in the contract, and that asset alone will come. Okay, the wagon example that we discussed, the asset is identified. And then what we saw, it is an identified asset if the lessor does not have substantive substitution rights and the asset is physically distinct. So physically distinct, we spoke about, there could be portions of assets. There could be portion of assets like a floor in a building. Or if there is no portion of assets, it could be a capacity. So when you talk about capacity, you should have substantially all of the capacity of the asset. Only then you can say that it is an identified asset. So transport of oil, movement of data, transport of water, if you have more than 90% of the capacity available for you, then and only then you can say that the asset is physically distinct. And if there are no substantive substitution rights, then well, it becomes an identified asset. Okay, so this is what we have discussed. Substantive substitution rights means there is a practical ability for the lessor and the lessor would also benefit economically. Both these conditions have to be fulfilled. Both these conditions have to be fulfilled. Okay, so with this we have completed identified assets, and now we move on to right to control the use. And here is where Sheena Jain had asked a question that if there is no right, if there is no direction of use, will it contain a lease? So we will now be addressing that part of the query. Okay, so now what is a lease? What is a lease? Suppose A Limited enters into an arrangement with B Limited. A Limited takes commercial space on lease. Now, A Limited is the lessee, B Limited is the lessor. So B Limited gives the property to A Limited. Now, in that commercial space, A Limited can do whatever he wants. A Limited can do whatever he wants, of course, subject to protective rights of B Limited. Just say you cannot do terrorism activities in that building. You cannot design a bomb in that building. You cannot do anything inflammable in that building. Okay. You cannot store LPG, etc. in that space. So that is protective rights of the lessor. But apart from that, can B Limited tell A Limited what to do? A Limited can leave the space idle. वो बोलेगा मैंने commercial space लिया है, I've taken commercial space, but I will keep it idle. I will not do anything. I will go to sleep in that. Okay, the directors of A Limited will go and sleep in that commercial space, or A Limited will put an office space in that commercial space, or they may make a sales office, they may make an administrative office, they may make a corporate headquarters. They can do anything and everything in that commercial space that they want, and lessor cannot stop them from doing it. So therefore, it is A Limited who has a right of control over that commercial space. Once the asset comes to the lessee alone can decide what needs to be done. In the NPCI example, NPCI decides which movie has to be screened, when it has to be screened, how the seating arrangements are there. All these things that relate to the theater's functioning is ultimately decided by NPCI alone. And therefore, can I say that NPCI directs the control, directs the use? Definitely it does. Definitely it does. So now, what do you say when there is a lease? A lease means the lessee has the right to control the use. So what do you mean by right to control the use? Right to control the use means the right to obtain substantially all of the economic benefits from the use of the identified asset. Okay. And the right to direct the use of the identified asset. So from that asset, from the commercial space that A Limited gets, A Limited can get economic benefit also, as well as it has the right to direct the use of the identified asset. Both these things should happen. So what do you mean by all the economic benefits? All economic benefits means direct as well as indirect benefits. Direct plus indirect benefits. Okay. Suppose, for example, okay, NPCI example. Okay. NPCI Inox. Inox owns the place. Inox owns the place. Okay. Let us assume that this is an industrially backward area. This is an industrially backward area. So therefore, when Inox constructed the theater, okay, well, apart from NPCI, there are no other units there. So when Inox constructs the theater, the government gave some subsidy to Inox. The government gave some subsidy to Inox because it constructed the theater. So relating to ownership, Inox gets a subsidy. Industrially backward means there are no much indirect taxes flowing to the company, flowing to the state. So Inox built it. So with the theater, you will have indirect tax filling the coffers of the state. So therefore, it gets a small subsidy for ownership, for constructing. At the same time, Inox is powering the theater only through solar power. Inox is powering the entire theater through solar power. Who designed the solar power? It was designed by NPCI. It was designed by NPCI. And because of usage of solar power, equivalent amount of 10% of electricity units consumed will be given to as subsidy, will be given to Inox as subsidy, So suppose Inox consumes in 1 month, say 5,000 units of electricity. How do I know that? Through the meter which is installed, approved by the government. But how is this consumed? Solar power. It's not through any hydel power or anything else. Okay. 5,000 units of electricity. So what does it tell? Well, we will give you subsidy equivalent to 500 units of electricity. Matlab, you are going to get cash subsidy. 500 units ka what is the tariff in that particular state, that much tariff you are going to get as a rebate or as a subsidy for your efforts in environmental maintenance, okay, in eco-friendly technology. Now, NPCI gets already benefits from INOX in the form of employees welfare. So employees ultimately serve NPCI in a better manner. That is one thing. Second thing is NPCI has designed the solar power plant. NPCI has directed INOX to draw the power from the solar power plant. So because of this usage, it should be NPCI and not INOX who should get the subsidiary. And INOX is just a conduit. Okay, government does not know that NPCI has built the solar power plant. Government knows that this is owned by INOX. So therefore, it will ultimately give the money to INOX. It will ultimately give the subsidy to INOX. But by way of the arrangement, INOX will transfer this subsidy straight away to NPCI, because who is the rightful owner of this subsidy? The rightful owner is NPCI, because NPCI has designed INOX. And therefore, any subsidy that goes on account of usage should flow back to NPCI, should flow back to NPCI. Okay, so that is the meaning of all benefits, right to obtain substantially all of the economic benefits. So what are these benefits? It could be the asset's primary output. It could be byproducts or subsidiaries linked to usage, not to ownership, linked to usage. Or it could also be through subleasing the asset. So it could also happen that NPCI took the theater on lease and it has subleased it to Fame Ad Labs, for example. Okay. So now this is a sublease arrangement. So whatever are the indirect sublease rent that NPCI will now collect, that is an indirect benefit for NPCI. And therefore, it is also going to have a right over those benefits. So ultimately, when you talk about right to control the use, it is the right to get substantially all the economic benefits, as well as the right to direct the use of the identified asset. Direct the use means what? How to do, what to do, when to do, where to produce, how much to produce. All these questions will be answered not by the lessor but by the lessee. In the case of NPCI example, which movie to screen, when to screen, how many times to screen, where will people sit, how will they sit, how much of power should be consumed, what should be my operation model. All these things will be decided by NPCI. All these things will be decided by NPCI. These are quite substantial decisions. Okay. And who is directing it? NPCI. Who is NPCI? Lessee. So right to direct the use means what? The lessee has the right to direct if substantial decisions linked to how and what, where and when the asset will be used can be taken by the lessee. So ultimately the lessee should be taking that. Ultimately the lessee should be taking those decisions. How, what, where, when, why, how much, all these questions relating to that leased asset will be taken by the lessee, and the lessor will have no say in that. Sir, is this right perpetual? No, it is only throughout the period of use. Throughout the period of use. Okay. जितने साल का contract है, जितने साल का term loan है, जितने whatever be the period of the term loan, that is what is going to be your period when you will control that particular asset. When you will control that particular asset. Is it okay? Yes. So now, if we further look, this chart is there in your study module also. So first thing is identify the rights that are most relevant to changing how and for what purpose the asset is used. Okay. Are the decisions made related to the rights identified above predetermined? If no, then does the lessee hold the right? Yes. If lessee holds the right, then lessee has the right to direct the use of the asset. It is inching towards becoming a lease. It is inching towards becoming a lease. Identified asset should be there. Right to control use of that asset should be there. Then it is inching towards being categorized as a lease. Does the lessee have the right to operate the asset throughout the period of use without the lessor having right to change those instructions? Does lessee have the right to operate? Yes. Can anybody change those operations? No. And therefore, in that case, the lessee has the right to direct the use of the asset. Next one. If that is no, then did the lessee design the asset? In our example, NPCI designs the seating arrangement, the solar power plant, all these things NPCI has designed. So, if the lessee designs in a way that determined how and for what purpose the asset will be used, if that is the case, your answer to that is yes, then lessee has the right to direct the use of the asset. If all answers are no in this case, yes, then the lessor has the right to direct the use of the asset. Okay, so this is what is the meaning of right to control the use. Any doubt so far? Right to control use. Any doubts, difficulties, queries? Any doubts, difficulties, queries? Anyone? Please ask. So Sheena, if I have to give your answer regarding that question, if NPCI does not direct the use, will it not be a lease? Obviously. For lease, you have to have an identified asset and control that identified asset. It is there in the definition only. And therefore, if the lessee does not control the use of an asset, then it is not going to be a lease. It is not going to be a lease. Okay. Yes. So isi baat pe shall we proceed further? Any question? Anyone? Any doubt? Any question? Any doubt, query, or we shall proceed to the illustrations in that case. Okay. All right. Fine. ABC Limited enters into a contract with XYZ Limited, which grants ABC exclusive rights to use a specific grain storage facility over a 5-year period in the months of May to June. During these months, ABC Limited has the right to decide which crops are placed in storage and when to remove them. XYZ provides the loading and unloading services for the warehouse activities. During the other 10 months, XYZ has the right to determine how the warehouse will be used. Which party has the right to control the use of the identified asset during the period of use? Okay. So now, April 1st, May and June. 1st May, 30th June. 2 months. This side it is 9 months. This side it is 1 month. Now, ABC Limited gets exclusive rights. So in this 2-month period, ABC Limited is responsible for everything. Whereas in the remaining cases, XYZ has the right to determine. XYZ Limited has the right to decide. So now you tell me, is this an identified asset? Is this an identified asset? This is lessee for your thinking. This is the lessor. Okay. So now you think and tell me, does it have a right to control the use or not? Come on, I need answers. Come on, think. The question is here. Don't look at the study module for answers. Which party has the right to control the use of the identified asset during the period of use? For May and June, yes. Jay Srivastav has answered. Anybody else? Sheena, Srinidhi, Vidula, Mahender, Tanushri, और कौन है? No right to control the use. This is answered by Tanushri Agarwal. Oh, Agrahari, sorry. Anybody else? Lessee has right to control for 2 months only. Tanushri has modified her answer. Very true. See, tell me one thing. The standard says you have to direct the control of an identified asset for a lease term. Does it say anywhere that the lease term should be a continuous lease term? ऐसा किधर लिखा है क्या? Is it written anywhere? Sir, I have not seen that being written anywhere. It could be for the entire year, which is what we have always seen. It could be for specified duration of the year. Take for example, mango orchards. Okay, mangoes. All right. Now, mango season comes somewhere in April. Okay, and it is there till June. So April, May and June, mango producers will need warehouses. Baki, the remaining entire 9-month period, they don't need anything. Okay, because the fruits are not growing in those 9 months. It is in these 3 months that fruits are growing and they are getting plucked. So therefore, for the, in this case, 2-month period, May and June, you will need to store those mangoes. Now, which mangoes you store, where you store, how much you store in this 2-month period, who is going to decide? The lessee is going to decide without interference from the lessor. Read the question. Okay, ABC has the right to decide which crops are placed in storage and when to remove them. Okay, so this is what is there. XYZ provides the loading and unloading services for the warehouse activities. During the other 10 months, XYZ. Okay, so for these 2 months, ABC has the right. Yes, so my lease is for these 2 months. Lease is for these 2 months. Okay. Sir, ऐसा discontinuous हो सकता है क्या? क्यों नहीं हो सकता? You can have a discontinuous what you can say, you can have a discontinuous lease period. Now 2 months, then 10 months, again 2 months, then 10 months, nothing, then 2 months, then 10 months. Like that, it is going to work. It is going to work. So for the 2-month period only, that is your lease term. That is your lease term. If they have said over a 5-year period, then your lease term is 2 months into 5 years. So that is going to be 10 months. Then your lease term is going to be each year 2 months, 5 years, 10 months. Your lease term over the 5-year duration is going to be 10 months. Okay. During the other 10 months, XYZ will decide. XYZ has the right to determine. So for the remaining 10 months, asset uska hoga. Yes. So that is what is going to be your answer. Yes. So which party has the right to control? 2 months. क्या नाम है? ABC Limited. And 10 months XYZ Limited. Is it okay? Yes, sure. So whole period you cannot say, Vidula. It will be for only 2 months. Yes. Have you understood this? Not whole time. It is for partial period. Are yes or no? No answers. You guys are there or not there? Okay, fine. I think you would have understood. Okay, let us move on to the next part. Illustration 8. MNO enters into a 15-year contract with power company PQR to purchase all the electricity produced by a new solar farm. PQR owns the solar farm and will receive tax credit relating to construction and ownership of the solar farm. MNO will receive renewable energy credits that accrue from use of the solar farm. Who has the right to substantial benefits from the solar farm? Chalo, think. Guys, please think and answer. Mahendra Kumar, what is again, sir? I didn't understand it. Yes, go through 7, this illustration 8, please. We have discussed this already. MNO enters into a 15-year-old contract with power company to purchase all the electricity produced by a new solar farm. So it's not going to be a sale of electricity. It is not going to be sale of electricity to outsiders. Entire PQR power company jo banayega electricity, that entire electricity is purchased by MNO. So in other words, it is as if PQR is manufacturing for MNO. Okay, as if PQR is manufacturing for MNO. Okay, PQR owns the solar farm. Okay. will receive tax credits relating to construction and ownership. Construction and ownership will not go to MNO, okay, because it is related to ownership, which you are not, okay. And MNO will receive renewable energy credits that accrue from use of the solar farm. So who has the right to substantial benefits from the solar farm is something that you need to answer. Who has the rights? Well, it is MNO. MNO gets all the benefits even in respect of the solar farm, right? Even in respect of solar farm, MNO will receive renewable energy credits. It's not going to get the subsidy related to ownership, but it is going to get the subsidy that is related to operations, and therefore substantial benefit does exist. Substantial benefit does exist. Right to substantial benefits from the solar farm. Yes, purchase all of the but in this case, Vidula, it won't be just the capacity that you are talking about. Okay, it's not just the capacity. You will also look at the economic benefits. You will also look at the economic benefits. To whom are they flowing? To whom are they flowing? Okay, so that takes care of illustration 8. Illustration 9. Illustration 9. Customer X enters into contract with supplier Y to use a vehicle for a 5-year period, which is identified in the contract. Y cannot substitute another vehicle unless the specified vehicle is not operational. Under the contract, X operates the vehicle, that is, drives the vehicle, or directs others to operate the vehicle. For example, hires a driver. Okay. Customer X decides how to use the vehicle within contractual limitations. For example, throughout the period of use, customer X decides where the vehicle goes, as well as when or whether it is used and what it is used for. Customer X can also change these decisions throughout the period of use. Supplier Y prohibits certain uses of the vehicle and modifications to the vehicle to protect its interest in the asset. Whether X has the right to direct the use of the vehicle throughout the period of lease. Yes. So go through illustration 9. What do you think, guys? I'll be waiting for your answers. Yes. Tell me. Illustration 9. Give me your answers. X Limited has the right. Customer X, Jay Srivastav, Srinidhi, and Tanushri have all answered yes. Look at the contract. X operates the vehicle, number 1. So he himself is operating, or direct others to operate the vehicle. That means somebody else will drive, but he will decide where to go, when to go. All those things he will decide. X decides how to use the vehicle within the contractual limitations. For example, X decides where the vehicle goes, when or whether it is used, and what it is used for. Customer X can also change these decisions throughout the period of use. Y prohibits certain uses. जैसे बाहर नहीं ले जा सकते, modifications नहीं कर सकते. These are merely protective rights. These are merely protective rights. So whether X has the right to direct the use, answer is X has the right to direct the use of the vehicle throughout the period of lease? Answer is yes. Answer is yes. The prohibitions jo bhi the, they are more of a protective nature. They are more of a protective nature. Okay. And therefore they cannot be considered. They cannot be considered. Okay. Next. Right to direct the use of an asset. Illustration 10. Entity A contracts with supplier H to manufacture parts. A designed the facility, provided specifications. H owns the facility and the land. A specifies how many parts it needs and when it needs the parts. H operates the machinery, makes all operating decisions, including how and when the parts are to be produced, as long as it meets the contractual requirements to deliver the specified number on the specified date. Assuming H cannot substitute the facility and hence is an identified asset, which party has the right to control the use of the identified asset, that is equipment? Read illustration 10. Read illustration 10. Who determines how, when, where the materials will be produced? Who determines how, when, where, how much to produce? All this who determines? Yes, tell me. H has the right to control the use. Yes, look at this sentence. Supplier H operates the machinery, makes all operating decisions, how and when the parts are to be produced, as long as it meets the requirement to deliver the specified dates. How much to produce, when to produce, how to produce, where to deliver. All these things are decided by H, and H is the lessor. Lessor takes the decision. Lessor takes the decision. So which party has the right to control the use? It is H which controls the use. Okay, it is H which controls the use. Is it okay? Yes. A does not have the right, the direction to use, as H determines how and when to produce. Absolutely right. So this also is taken care of. Entity L enters into a 5-year contract with company a ship owner, for the use of an identified ship. So you have L, you have A. He is the lessor, L is the lessee. L decides whether and what cargo will be transported and when and to which ports the ship will sail throughout the period of use, subjected to restrictions specified in the contract. So L decides what cargo will be transported, whether it will be transported, when and to which ports the ship will sail through the periods of use, subject to restrictions specified in the contract. Subject to restrictions specified in the contract. What are those restrictions? They prevent L from sailing the ship into waters at high risk of piracy or carrying explosive materials as cargo. A operates and maintains the ship and is responsible for safe passage. Who has the right to direct the use of the ship during the period of use? All right. Who decides here? It is L. It is entity L. It decides whether cargo will be transferred, how much will be transferred, when and when and to which ports the ship will sail. All this is taken care of by entity L will taken care of by entity L. Is it okay? Yes. And therefore, who has the right to direct the use of ship? It is L. L has the right to direct the benefit. Fairly simple hai yaar, kuch bhi nahi hai. Okay. Last set of examples and then we are done with the session today. Customer M enters into a 20-year contract with energy supplier S. So M is there, S is there. To install, operate and maintain a solar plant for M's energy supply. So S will have a solar plant. Yes. What does this solar plant do? It supplies electricity to M. M designs the plant, hired experts in solar energy to assist in determining the location and engineering of the equipment to be used. M has exclusive right to receive and the obligation to take any energy produced. Okay, so it is M who decides how much energy it wants. It is M who decides whether to take it or not. It is M who designed the solar power plant. It is M who designed the engineering of the equipment. All these things are designed by M, and therefore it can be established that M is having the right to control the use of own asset. Okay. Yes, M is having the right to control the asset. Obviously, yes. Answer to question number 2, test your knowledge. Are you confirmed? Yes or no? Yes or no? Question 2. Bolo, question 2, give me your answers. I have discussed it already, but give me your answers. Give me your answers. Yes. Who has the right to direct the use? It is M who has the right. Okay, so this is same as illustration 11, question number 3. Ship hai which is prohibited from entering waters where piracy is there. Otherwise, it is the lessee who has the right to direct. So that is exactly the same. This question is extremely important. Okay, baki sab to theek tha. This is important. This has come in the RTP for this attempt. Extremely important question. Basically, you do question number 8 and right to control use is fully revised. Okay, it's an RTP question. Chances of getting such a question in exam is not very probable because it is a purely theory question, purely theory. Okay, there is not even one figure which is there. Okay, nonetheless, let us first read and try to understand. The last mile is a dedicated cable that connects Y's network with the end customer's device. So yahan pe you have entity Y. Entity Y has its wire and yahan pe you have the customer. So entity Y can be called as the supplier. The customer is just a customer. Okay, usko kuch naam nahi diya hai. The use of this cable is at the discretion of the customer. How to use this cable? How to use this cable is at the discretion of customer. Okay. Entity Y decides the location of endpoints. So this endpoint, who decides? it is entity Y who decides. Okay. End point is fixed by him. Okay. It has the right to replace the lines. So Y can replace the lines. Can replace the lines. However, it is not practical to replace, since replacement would require additional cost to be incurred without any corresponding benefit. Without any corresponding benefit. Okay. Is there a right to substitute? Yes. Is it practically possible to substitute? Answer is no. So does the entity Y have a substantive substitution right? Substantive substitution right ke liye you need two things: practical ability to substitute and economic benefit should be available. In this case, entity Y has no what you can say, it has no practical ability and no economic benefits. That means it does not have substantive substitution rights. It does not have substantive substitution rights, and therefore will this be in the case, will this be within the scope of Ind AS 116? Answer is yes. Scenario 1 will be within the scope of Ind AS 116. Sir, how did you decide? Look, entity Y gives the wire. Customer decides how to use that particular leased line. Okay, so discretion of customer. Can Y replace the lines? Yes, he can. But is it practically possible to replace? No, because it is not economically beneficial also. So therefore, will Y replace the lines as he wants or as the customer wants? Y cannot replace as he wants. It is dependent on the discretion of the customer, and therefore Y does not have a substantive substitution right. And because Y does not have a substantive substitution right, this becomes an identified asset which would be within the scope of Ind AS 116. Okay, so the punchline is, it is not practical to replace the lines. It is not practical to replace the lines, since replacement would require additional cost. Okay, so this is what is going to be your answer. Suppose if in scenario 2, if it is practical to replace the lines and Y would benefit, then customer has the wire, but that wire can be replaced anytime by entity Y. Jab chaho, whenever it wants, it can replace the wire, and entity Y would benefit. It is seeing benefit, so it is replacing. So would the answer be different in this case? Well, in this case, yes, not covered under Ind AS 116. If that is the case, it would not be covered under Ind AS 116, because now in scenario 2, entity Y can practically replace, can get economic benefits. That means he has a substantive substitution right, and when he has a substantive substitution right, it is automatically out of Ind AS 116. It's automatically out of Ind AS 116. Is case 1 clear? Is case 1 clear? Everyone, those of you who are watching, is case 1 clear? Handwritten you need, because I have just scribbled in today's handwritten notes. Okay, I have no problem, but nothing of use. In any case, this presentation you will get it towards the end of the sessions. Okay, so handwritten notes, see, dene mein koi issue nahi hai, but I don't know how far it's going to be useful. Okay, I'll upload, but at the end of the session. Okay, have you understood case 1, both the scenarios? Guys, have you understood case 1, both the scenarios? Are yes or no? I'm waiting for answers. Yes or no? Case 1, both the scenarios, did you understand, guys? Case 1 relates to right to control or SSR. It is basically, see, this case 1 is relating to substantive substitution rights. Okay, Jay? Because it is asking whether this arrangement would be within the scope of Ind AS 116. So when we talk about Ind AS 116, it must fulfill two conditions. Identified asset, right to control the use. Identified asset means there must not be an SSR. And right to control use means economic benefit should flow to the lessee from the use of that asset. And lessee should take substantial decisions regarding where, how, when, how much to use that particular asset. So these are the two things. So now when we talk about SSR, there is no substantial substitution rights in scenario 1. That means the asset, is it an identified asset? Yes, because they have mentioned that the use of this cable is at the discretion of the customer. Matlab, it is an identified cable. You can identify it and therefore it becomes an identified asset, provided the user, the lessor does not have substantive substitution rights. So it is a question on applicability of 116, but when viewed from the prism of substantive substitution rights, because remaining all is fulfilled. The customer has the right to use the asset as he wants. It is given here. The use of this cable is at the discretion of the customer. So that part, right to control, is already there in this question. So therefore, you will have to look at whether there is an identified asset. Identified asset, physically distinct part is there, but we have to look at whether substantive substitution rights are there or not there. And it is not there in the first case, wherein the arrangement would be within the scope of 116. It is there, the SSR is there in the second scenario, and therefore it will not be covered under Ind AS 116. Okay, so this is what is your case 1. Good. Now we move on to case 2. X enters into a 10-year contract with a utility company Y. Okay, so you have X on one side, Y on another side, for the right to use 3 specified physically distinct fibers. So Y will give 3 fibers, 3 distinct fibers. The customer, so X is the customer, Y is the supplier or lessor, lessee. Okay, so customer makes the decisions about the use of fibers. So it is X who is going to decide. So what is there with X? Well, X has right to control use. दिया है already. Customer makes decisions about use of fibers. Y owns extra fibers but can substitute these for customers' fibers only for reasons of repairs, maintenance, or malfunctioning. That means, does entity Y, the supplier, have substantive substitution rights? Answer is, it does not have substantive substitution rights. It does not have substantive substitution rights, and therefore the useful life is 15 years. Whether this arrangement is covered under Ind AS 116, definitely yes. Definitely yes. There are physically distinct identified assets. These assets, the 3 fiber cables, are under the control of customer X. They are under the control of customer X only. That is the important point. Then after that, Y can substitute the cable only for the purposes of repairs, maintenance, malfunctioning. Apart from that, it cannot substitute the cable. Apart from that, it cannot substitute the cables. Is it okay? So therefore, Y does not have a substantive substitution right. And because Y does not have that right, this becomes an identified asset, with a right to control use, and therefore will this arrangement be covered under 116? Answer is yes, it will be covered under Ind AS 116. And finally, I hope case 2 is understood. We move on to case 3. Customer X enters into a 10-year contract with Y. X is the customer, Y is the supplier or lessee and lessor. Okay, with entity Y for the right to use a specified amount of capacity within a cable. So there is a cable that runs between Mumbai to Delhi. Okay, now the specified amount is equal to customer X having the use of full capacity of 3 fiber strands within the cable. Okay, that means what? Within this line, within this cable, whatever capacity is being utilized, that is the equivalent of 3 fiber strands within the cable. That is the that is equivalent to full capacity of 3 fiber strands. The cable contains multiple fibers with multiple capacities. Entity Y makes decisions about the transmission of data. That is, entity Y lights the fibers, makes decisions about which fibers are used to transfer the customer's traffic. The useful life of this fiber is 15 years. Whether this arrangement is covered under 116. You have done case 1, you have done case 2. I want you to answer case 3 now. Thoda sa socho, give me the answer to case 3. It's there in front of you. Don't refer the RTPs and all. Try to be honest. Okay. Try to be honest and give me this answer. Read case 3 and try to give me the answer. Whether the arrangement is covered under 116. Yes. Vidula is saying no, this arrangement is not covered under 116. Can you please explain why? Vidula, can you please explain why it is not covered? Not covered. Jay is also saying not covered as SSR is available. Tanushri Agrahari is saying not covered under Ind AS 116. Try to briefly chip in a reason if possible. I know I'm asking too much of you. But I need to know whether you have understood the concept. Right to use is with lessor only. Jitu is saying right to use. Y has full control. Tanushri is saying Y has full control over transmission of data. When and how. Okay, beautiful. So now let us look at this. I have Mumbai and Delhi. Some of the things are given to confuse you. There is a huge optic fiber cable. Okay. Pardon my drawings, I was never good. Okay. There are huge optic fiber cables between Mumbai and Delhi. Okay. Now, within this cable, you have to transmit the data. So within this cable, there are multiple fibers. There are multiple fibers. Okay. बहुत सारा fibers है. Out of those fibers, the amount required to transmit data by X is equivalent to 3 fiber strands. So 1, 2, 3. Multiple fibers में से only 3 strands belong to this company. So if you talk about capacity, have I substantially covered the capacity of the fiber optic table of the fiber optic cable? Answer is no, you haven't. Out of multiple strands, your capacity is equivalent only to 3 strands, and therefore substantial capacity is not utilized. Okay, so by lessee, substantial, what you can say, substantial capacity not utilized. Substantial capacity not utilized. So when you spoke about identified asset, I told you it refers to either a portion of an asset, so like a floor in a building, or portion की बात नहीं करेंगे. If we talk about capacity, then I have to use substantially all the capacity. That means more than 90%, which is not the case here. Okay. Now, so no substantial capacity. Next one. Entity Y makes decisions about transmission of data. That means the lessor will decide the transmission of data and what fibers are used to transmit the customer's traffic. It is also going to decide which fabric will be used by, which fibers will be used for transmitting the customer's traffic. Matlab, the lessee does not decide anything at all. He gives the data for transfer and then वो बैठ जाता. He sits like that. He's at the mercy of the lessor. Lessor, whenever he wants, he will transfer. However he wants, he will transfer. Whichever cable he wants to use, he will transfer. Whichever material he wants to use, he will use for making the fiber cable. The lessee is at the mercy of the lessor for this transaction. And therefore, this is not a right of use of the fiber. This is not a right. This is just what we can call as a this is not a right. This is just what we can call a facility that is taken to transmit the data. The right of use does not exist with the lessee. It is the lessor who decides. It is the lessor who decides how the data will be transferred, where it will be transferred, when it is to be kept. All these things are decided by the lessor, and therefore, there is no right of control. No right of control with no right of control with X. Hence, not covered under Ind AS 116. Not covered under Ind AS 116. Sheena's answer is right because there are multiple fiber with similar capacities, and also Y has the right to direct the use. Okay, so substantive substitution right is with Y. More than that, right to direct the use is with Y. Okay, right to direct the use is with Y. Okay, exactly. Tanushri has said Y has full control over transmission of data. That's absolutely right. Okay, so this kind of takes care of the definition of lease. First two parts, that is identified asset and right to control the use or direct the use. We have completed this part. Tomorrow, I mean on Thursday, we shall start and complete these lease components. And hopefully on Saturday, we should be starting off with journal entries and accounting. Okay. Is it all clear? Sir, if it is not covered under Ind AS 116, then it is applicable under which Ind AS? See, depends. Now, in this case, this is a data transmission facility. So you are transmitting the data from one end to another. It is just taking the services of the leased line. So rather than a standard, it is an expense. Okay, it is an expense. It is like you are taking the mobile services of Airtel, for example. Airtel does not build anything specifically for you. You have to make a call to your friend. Airtel gives you the connection, the network, the spectrum, everything. But tomorrow Airtel can decide it can remove 5G from here and put it in another profitable location. Yes or no? For you, it is nothing but a telephone service that you are availing. So in this case, the what you can say, the customer is just availing data transmission services, or what you can call is internet services. Okay, so it will be treated as an expense and covered under GAAP in that regard. Okay, it will be covered under GAAP in that regard. Okay, is it understood? It's not a lease, it's something that is other than a lease. Okay, so have you understood, Srinidhi? Yes. Any other queries, any other doubts, any other suggestions, any other whatever you have to share? Yes. Anything else? Handwritten notes and the presentation you will get on the last day. Okay, that is 29th, a week from now. Anything else, guys? Anything else? Any doubt? Srinidhi, all clear? Sheena, your query about not directing the use NPCI and INOX is addressed. Anybody else's queries are pending to be addressed? All clear. Okay. No other queries. Yes, yes, Piyush. I am from Goa. That's right. Okay, so anything else? Any other query? वो query नहीं था वैसे. Okay. All clear. I'll wait for another 2-3 minutes and then wind up the session. Acha, please share your feedback with the institute. Okay, for the teaching. If there is anything I need to improve upon, please let me know. Okay. All right. I have a query. When can right of control be with X? Jay, the right of control can be with X when it must fulfill either substantial capacity needs to be utilized. Okay. That means all the cables, the entire space is going to be used up by the lessee. So that is one thing. Second thing is the lessee will decide when it has to send the data, how it has to send the data, how fast. So basically, if it is a leased line, okay, all these corporate offices, internet is not just a connection that is taken. They normally take a leased line connection, and because they take a leased line connection, it belongs to them. It is an identified line. It is an identified line exclusively for them. Okay, they are using the entire capacity, the entire bandwidth of that cable, and therefore that is known as a leased line connection. Okay, nobody else's data is getting transmitted in those lines, and therefore that becomes a leased asset for the lessee. Okay, so okay, Sheena Jain, in one of the previous example of 2 months, yes, please tell me what happened. 2 months example. Yes, that's right. I have written it here. Yeah, tell me, what is your query, Sheena? In one of the previous example of 2 months, what happened? Jay, hope your query is solved. Okay. Sheena, what is your query? In one of the previous example of 2 months, this is the question, ABC Limited, XYZ Limited, where ABC gets it for 2 months, May and June, and remaining 10 months, it is with the lessor. Answer J, is it clear? Clear. Okay. Sheena, I am waiting for your query in one of the previous example of 2 months. Okay, let me explain once again so you should be able to understand. See, it's not mandatory that the lease term should be a continuous tenure. Okay, you can be controlling the use of the identified asset only for a small duration out of the entire financial year. So suppose ABC Limited is an entity that deals with mango orchards. The mangoes that it plucks require storage in warehouses only for 2 periods, May and June. April stock will be kept until May stock will be kept until June. After that, mango season is over. So therefore, for these 2 months only, you need a warehouse. Now, for these 2 months, you need a warehouse. Throughout the year, you don't need. So therefore, throughout the year, it is the lessor who will control what goes on in that warehouse. Whereas for these 2 months, the lessee is controlling. The lessee is deciding what needs to be done for the period of 2 months. And therefore, no, you cannot say that having the asset for substantial, Sheena is asking, having the asset for, doesn't matter. See, it doesn't really matter whether you have the asset for 11 months, 11 months and even 30 days you have. Even one day you hold the asset and control it, it becomes an ROU asset. You have exemptions, okay, but I'm not talking about exemptions right now. I'm not discussing anything about exemptions. What I'm talking is, do you have an ROU asset or not? Is it covered under lease or not? For lease, what you need to have is an identified asset, a right of controlling the use in the lease period. Lease does not say you should have the control for entire financial year. It does not say you should have control for continuous tenure. It's not written anywhere. It's not even written you should have control for the specified period, at least 6 months in a financial year. ऐसा भी नहीं लिखा है. Okay, this is a principle based standard. This is a principle based standard. Apply the principles. Apply the principles. Okay. So therefore, for 2 months in each year, for 2 months in each year, that means for 10 months in 5 years, ABC Limited controls the warehouse. For 10 months in 5 years, ABC Limited controls the warehouse. So for these 10 months, there is a lease. For these 10 months, there is a lease. But XYZ Limited controls for 10 months in 1 year into 5 years. So this is for 50 months. For 50 months in 5 years, there is no lease. There is no lease because it is controlled by the owner itself. Whereas in this case, lessee controls for 2 months. In those 2 months, he decides which mangoes go to which warehouse will be vacated, which warehouse will have which fruit, how it will be stored, what will be the FIFO method of removing the inventory, what will be loaded, what will be unloaded, how much spaces are to be kept, any any storage facilities, all these things will be decided by the lessee in the 2-month period. So the lease is only for 2 months in 1 year. Even going further, I will say out of 5 years, it is only for 10 months. But hai to lease na? What is lease? Control the asset and identified asset. Both the things are there. Yes, you control the warehouse. यहाँ पे capacity means what? Warehouse का पूरा capacity, the entire warehouse you are only controlling for a period of 2 months. So don't think it from the sense that, don't confuse it with optical fiber के अंदर the data that is going. Don't confuse it with that. In the case of optical fiber, the identifiable asset is the capacity within that fiber. The identifiable asset is the capacity within that fiber. You need to have access to substantial capacity, which is more than 90%, in which case it could be regarded as an identifiable asset. However, yahan pe the whole warehouse 100% capacity is controlled by ABC for a 2-month period, and therefore there is a lease. Therefore, there is a lease. Okay. So now Jitu is saying in such a case, the asset will be shown in the balance sheet of both ABC and XYZ. Doesn't that amount to duplication of the same asset? Jitu, first things first, ABC Limited will not show the asset, but what ABC Limited will show is right of use asset. They are two different things. Okay. ABC Limited does not have the title to the asset, but it has a right of use asset. Whereas what the lessor will show, the lessor will show the asset under PPE, that is under Ind AS 16. Whereas ABC Limited will record the asset. Whereas ABC Limited will record the asset not as PPE, but as an ROU asset. They are two different things. PPE is different, ROU is different. The lessor will have this asset in his books for the entire year. In fact, the lessor will charge depreciation also for the entire year. Yes, because it is an asset in his books. But in this case, ROU asset is something different. Okay. Anyways, I have not yet discussed lesser accounting. Okay, I have not yet discussed lesser accounting. So when we come to that, we will see how the accounting happens. But as of now, yes, you go with the thought that lessor will record the asset, lessee will record the ROU asset. They are two different distinct assets. Okay, they are two distinct assets. There is no transfer of asset from the lessor to lessee. What is transferred is right to use that asset. Okay. So they are two very different things. They are two totally different things. In the case of transfer of asset, you need to make a sale deed. In the case of right of use asset, you just need to have a lease agreement. Okay. So they are two totally different things. Both the presentations are perfectly fine in accordance with Ind AS. Okay. So any other doubts? Jitu Joni? Yes. Sheena Jain, is it clear? Is it clear now? You will have to come out of the mindset that cross accounting should tally. Okay. Like lesser account something, lessee should account the cross amounts. Okay. So cross tallying is something that will seriously be affected in Ind AS 116. And in fact, if you remember the framework, in the framework also it was written that what is a liability for a particular party may not be an asset for the same amount for the counterparty. It's not at all necessary, because accounting for a liability could be governed by a particular standard. Accounting for asset could be governed by another standard. And therefore, what is a liability for one, the same amount will not be an asset for the other one. It's perfectly normal under Ind AS. It's perfectly normal. Okay. So Sheena, I'm not sure if your question is clear, if your question is sorted out. Okay. But if there is anything, please let me know in the next class. Okay. So that's it for today. Thank you everyone, and see you on Thursday. Just revise what we have done. We've done illustrations. We have discussed substantive substitution rights. We have discussed right of control. All these things we have discussed. So my request is just revise what we've done. So that should take care and help you for the next class. Is it okay? Yes. Thank you everyone.